Right, 28 minutes after 7, here we are. The day has finally arrived. We've all been fearing, I think, interest rate day.
Yes.
Have you got the crystal ball? Is it working? Did you get to charge it?
Well, it's working, I hope. And I hope it's giving me the right information, right? Because I don't think anyone can afford to pay a little bit more on anything at the moment. So that is the big thing that we're looking at today, is the interest rate decision that will be made by the South African Reserve Bank. What we're currently sitting on now is a repo rate of 8.25%. And that means your prime lending rate, and this is what the bank will charge you in terms of interest when you go for a loan, is at 11.75%. And that is, of course, if you get prime. Remember, banks need to make money, and of course, they will add to that prime lending rate. And so the MPC is expected to keep interest rates unchanged today. And the committee is meeting, and they're focusing on the upside risk to inflation in the country. So yesterday, the inflation data came out, and it increased marginally to 4.8% from 4.7% in July. And that was mainly due to the effects of fuel inflation. So fuel prices have risen sharply over the last few weeks, and that, of course, those increases have a knock-on effect on food and transport costs across the country. Let's take a look at the trend over the last 14 months. So you'll remember, during the peak of the COVID-19 pandemic, interest rates in South Africa hit a record low of 3.5% in October 2021. And that was largely to shield the economy from the pandemic, which had dire economic implications. And as you can see, after that, they began that aggressive hiking cycle, and the Russian invasion didn't help things. And then we're sitting at that high of 11.75%. And that's a hold from the previous meeting as well. So they are indicating that growth this year, and that is the SARB, will be at around 0.4% from 0.3%. But energy, logistic constraints continue limiting the economic activity. And of course, these are things that they'll continue to look at when they look at the inflation trajectory. A final one now. If you are one brave South African and you decided to get a bond of about R1 million, you were paying at a 7% interest rate, around 7,700 Rand per month for that bond. Fast forward to July 2023, a whopping 10,837. And we can all hope, as South African households, that the Reserve Bank will leave interest rates on hold, because I don't think many of us have that much disposable income that we can lend to a car repayment, a loan repayment, and of course, the home loans that many of us have taken out. But let's bring in economic analyst, Professor Bonke Dumisa. Very good morning to you, Prof. Thank you, as always, for joining us this morning. Let's talk about that expectation by the SARB and what we're likely to see from the South African Reserve Bank, given that we usually take our lead from the United States, which have also been quite aggressive in their interest rate hiking cycle.
Good morning to you and your viewership. You have said everything that I wanted to say, because I am 100% convinced, as you've just said, that the South African Reserve Bank is going to put the interest rate button on pause today, which means they are not going to raise the interest rates, the repo rate, from 8.25%. The reasons you've already given them. In July, we had an inflation rate of 4.7%, which was well inside the 3 to 6% target inflation rate range. And for August, we had just a marginally higher 4.8% inflation rate, which is well within the 3 to 6 target inflation rate range. So that is good reason enough for the South African Reserve Bank not to raise the interest rates. And furthermore, as you've rightly pointed out, last night, the American Federal Open Market Committee under Jerome Powell decided to keep their federal interest rates the same, unchanged. And South Africa always takes the cue from the USA. By the way, even China did not raise their interest rates. So it's a pause button for the whole world, except for for the European Union, which did increase the interest rates. So we will be happy, and we are happy.
Prof, but there are those risks that you've also just mentioned that do remain and that might put pressure on the inflation outlook. I mean, the big one for us is our energy crisis, recently plunged back into stage 6. And I suppose the uncertainty around that weighing on overall cost of doing business or purchasing certain goods and services. Talk us through some of those risks that persist and that may cause the Reserve Bank to later look at the situation and continue on that hiking cycle.
Okay, we are agreed that the interest rates will remain at 8.25%. The only threat, not today, the only threat at their next meeting is that now in September we've seen significant increases in the fuel prices. And also in October, this is not a prediction, it is a definite thing. In October, we'll also see significant fuel price increases again because of the very high international Brent crude oil prices. Those two significant increases in fuel prices in 2 consecutive months in South Africa in September and October will then push us back. I hope it will not push out the inflation rate above the 3 to 6% target inflation rate range. However, it will definitely push it much higher than the current 4.8. So it may move to the wrong side of 5%. And we all know that the moment the inflation rate is far higher than the midpoint of 3 to 6%, that is at 4.5%, the South African Reserve Bank gets jittery and they start pressing the up button. So let us hope that the damage which will be caused, and unfortunately, as you've mentioned, the food prices again at 10%, that's really still too high because the people affected mostly by that are the poor people. So it is sad. Unfortunately, every time the fuel prices increase, it affects mostly the poor because all the things that we use in South Africa, almost 95% of them are transported by road. So let us just hope that maybe after these 2 months, things may be better. But the prospects for the next meeting of the Reserve Bank are not so good, but I still remain hopeful, as you do remain hopeful as well.
I really do remain hopeful, Prof, only because I really can't afford not to have a bit of a glass half full outlook because everything else around the country is not doing too great. But thank you for that update, Professor Bonke Dumisa, joining us as a pre-look at what we're likely to see the Reserve Bank do this afternoon.